Good morning and welcome to this virtual meeting of the Audit Committee of Allerdale Borough Council. My name is Lee Jardine and I'm the Democratic Services Officer, and for the purpose of this meeting I'm also the host. I'll be assisting the committee with the use of technology to manage the process of the meeting. I will not have any control over the meeting and the meeting will not begin until instructed by the Chair. This meeting is currently being live streamed via YouTube and a recording will be made available afterwards. Everyone has indicated they're attending the meeting has now joined, and shortly I'll hand you over to the Chair. But first, introductions. Can I ask the attendees to introduce themselves, starting with the members? Councillor Bainbridge.
Councillor Bainbridge, attending.
Councillor Campbell-Savers.
Councillor Campbell-Savers.
Councillor Kirkbride.
Councillor Adrian Kirkbride. Good morning.
Councillor Tyson. Councillor Tyson. Okay, well, we have Councillor Tyson who will chair.
All right, I'm here. Morning, Councillor Tyson.
Thank you. And now we'll move over to the officers. Paula McKenzie.
Good morning, Paula McKenzie, Assurance Risk and Audit Officer.
Thank you. And we have colleagues on the call from Grant Thornton. Richard Anderson.
Good morning, Richard Anderson, Grant Thornton, External Audit Manager.
And Gareth Kelly.
Good morning, Gareth Kelly. I'm a director from Grant Thornton and I'm your engagement lead.
Thank you. We also have the communications team on the call with us today. So thanks everyone for your introductions. To speak, please can members use the raised hand icon to indicate they wish to speak, and only speak when requested by the Chair. Once you finish speaking, please can you lower your hand. If a vote is required, the Chair will ask myself as Democratic Services Officer to go through each member alphabetically. Each member will reply with their name and I vote for, against or abstain. So thanks for all that. I'll now hand you over to the Chair to start the meeting.
Oh, morning. I'm Alan Tyson and I'm Chair of the Audit Committee. Welcome to the meeting. We just, for anyone looking in on the meeting, there is a slight change to the printed agenda in that item 7, the Grant Thornton reports have been added. Okay, so I will start with the minutes. Item 1, to sign as a correct record the minutes of the meeting held on 29th of July 2020. Do we, are there any questions about the minutes, or please raise your hand if there's any questions. If not, I will assume that we can accept the minutes.
Chair, Councillor Campbell-Savers wishes to speak.
Okay, Councillor Campbell-Savers.
Thank you, Chair. I'm not questioning the accuracy of the minutes, but I just checking procedure. If I want to follow up on something which was raised in the last minute and is in these minutes, when's an appropriate time to ask that question?
Lee, I think the answer is no.
Well, if you just want to go over to the monitoring officer, Chair, she can clarify that for you. She's on the call now. Sharon?
Thank you, Chair. Yeah, if you want to raise that issue now, if you want to continue with the vote around the accuracy of the minutes, and the Chair just confirm that, and then if you want to just raise that issue, Marcus, after that, that would be fine.
Thank you.
Okay, so I'll continue with, are there any other queries about the minutes, or
no one else is wishing to speak, Chair, so you can move the minutes.
So I'll move the minutes as acceptable. Okay, thank you.
And if we want to go back to Councillor Campbell-Savers now.
Yes, Councillor Campbell-Savers, would you like to speak now?
Thank you, Chair. Minute item 77 has got a section that says, following questions from members, the Audit Risk and Assurance Manager confirmed to members that under the terms of reference of the Audit Committee, they only receive the annual accounts, not the revenue or outturn reports. I was absent from the last meeting, but I have watched the meeting on YouTube, and actually I think the words that were used were along the line of that information is reported to another committee. What committee of the council is that reported to? Is there anybody who might be able to enlighten me?
Okay, Paula, can I ask you to respond to that, please?
If I can just
Oh.
stop in, if I could just step in there, Chair. Thank you. Yeah, Councillor Campbell-Savers, I have raised that issue with the Section 151 officer, and we are actually currently reviewing where the information goes to, and your request or the committee's request to have that information at the audit committee. So I have picked that up with the Section 151 officer, and we will be coming back to you if that's okay. At the moment, the executive obviously reviews the performance information.
So the answer to that is currently there's no committee of the council that looks at that information other than the executive. Is that, do I take that as right from that answer?
The executive looks at it. I would have to confirm in writing around the budget, any budget group, because I know we have had cross-party budget groups that have looked at it, and the Section 151 does do, officer has had sessions with the scrutiny. So I'll get that response in writing to you, Councillor Campbell-Savers. There's a lot together with the outcome of the review.
Chair, I believe if we've identified a blind spot, I think we should refer that to the Constitutional Review Group to see whether that could be included in their programme.
Okay.
What I'll do is we'll do this review with the Section 151 officer, and then we'll see if anything needs to go to the Constitution Review Group following that. Thank you.
Chair, I believe we can still make a referral from this group, can we not?
You can certainly ask for it to be referred, and I'll pick that up as the monitoring officer. But if we can deal with it prior to the next meeting of the Constitution Review Group, obviously we'll do that.
Thank you.
Thank you.
Right. So on to item 2, apologies for absence.
Thank you, Chair. Apologies have been received from Councillors Armstrong, King and Hodgson.
Thank you. Item 3, declaration of interest. Councillors stroke staff to give notice of any disclosable pecuniary interest, other registrable interest, or any other interest, and the nature of that interest relating to any item on the agenda in accordance with the adopted Code of Conduct. Please indicate if you have any interests.
No indications, Chair.
Thank you. Questions. Item 4. To answer questions from members of the public submitted in writing or by electronic mail no later than 5 p.m. 2 working days before the meeting.
No questions received, Chair.
Thank you. So we can now proceed with item 5, the Assurance, Risk and Audit Report for the quarter ending 30th of June 2020. Pages 7 to 38. And I think I will hand you over to the officer for this to go through this report, please.
Thank you, Chair. So yeah, agenda item 5 is the Assurance, Risk and Audit Performance Report for the quarter ending the 30th of June, which is our quarter 1. As it states in the report, it's to inform the committee of the work that the team have done in that quarter. I would like to ask the committee to first note 2 amendments to that report. The first one is on page 7, which states that the portfolio holder is Councillor Jim Lister. It states that it's Councillor Cook, and it should state that it's Councillor Jim Lister. The second amendment is on page 9, and that's on paragraph 2.2. It states that the performance percentage is 68.18%, and that calculation should actually be 75.97%. So it is above the planned target of 73.72. So yeah, in regards to the report, the first one is the time summary, and I'm happy to take any questions on that. I don't know if members would prefer to ask the questions at the end or during each section of the report.
Can I ask a question off the back of this change in the statistics from 68% to 75%?
Yeah.
Should the following section where it says this is a considered an excellent achievement based on challenges faced within the team during this period, does that line need revising at all in light of the change?
No, because our percentage is actually change makes it better, so it makes it actually above our planned target rather than below, which would be the 68.18.
Okay, thank you.
Yeah.
If I can just come in, Chair, because the Chair today doesn't have access to the functionality of the Zoom. If members do have a question, I think you should just raise it as you would normally. Obviously, just the Chair then can say, yeah, okay. So if you just want to say, I've got a question, Chair, and the Chair can then approve, or, yeah, okay. Moving on. Thank you. Sorry about that.
Okay, well, if there's no questions, the time summary is actually as we would planned, given that obviously we dealt with quite a lot of COVID issues and got involved with the discretionary grants, the COVID risk profiling. So there's no issues from an audit point of view on our time summary. It is how it would be expected to be halfway through the year. If we move down to the assurance and consultancy activities, you can see that on this quarter, we did the revenues and benefits, the financial services, cash management, GDPR compliance. The only one outstanding for within those is the financial services, which is currently at final report stage, and we're just waiting for that to be confirmed. Obviously, at the end, we'll discuss the revenues and benefits, the ICT, and the cash management reports, and I'm happy to take any questions. In regards to corporate fraud, we're currently working on our NFI activities, and that's all running nice and smoothly. We have just completed our data check sets and our privacy notice, and the next step will be the upload of data when the work will actually start on the January 21. So yeah, I'm happy to take any questions on that, but again, there's no issues from audit's point of view. Progress with the annual plan. As I say, financial services now at draft final report stage. GDPR has now been completed, and the ICT audit is still in planning stage due to some resource changes within the department. So it is still planned to go ahead. We're just looking at days that we've got to do that. I will now move on to the recommendations. So it states that there are 26 actions that are overdue. However, given that this report is for the Q1, there actually is only 5 agreed actions that are overdue, because a lot of the agreed actions on the report, their deadline for completion wasn't until the end of June. Therefore, the update wouldn't come to this committee, it would come to the next committee. I have got an update on those, which are The development services, the due dates all were revised to the 30th of June. So as stated, they will come to the next committee meeting as an update. However, I can report that they all are currently above 50% complete. And we have had to, due to a change in heads of service, service areas, revise new owners for those. So we don't have any issues with that. Car parks is exactly the same. All dates were revised to the end of June. So again, they wouldn't be due for an update till the next committee. And also I can happily report that it is above 80% complete already. Asset management, again, is 95% complete. And we have requested a further update on that. The economic growth is at 95% complete, which we're happy about because, again, due to the changes in service areas, that one has required a new responsible officer to be found. Revenues and benefits, again, the due date has changed to the 30th of September. So again, that one isn't due for completion yet. And the one was extended to the 30th of June. It is over 50% complete. And again, we wouldn't look to get the update from that until the next committee. For the governance ones, we have got 2 that are overdue and 1 that's currently looking whether we can accept the risk on that one given the circumstances. However, we have chased the ones that are overdue that we don't have an update for, so hopefully if the committee want, I can chase that further and send an update once the committee has finished and send that via email. Contract management, again, the deadline was extended to the 30th of June. Corporate health and safety, I can report that 1 has now been fully completed and the 3 outstanding have been changed to the 30th of June deadline. Most of these was because of, COVID and the issues that we had in regards to remote working. Excuse me. Finance, I can happily report that 2 of them have been completed and we're just waiting on an update for 1. Again, I'm happy to chase that up for the committee and send that round once I have that update. And the ICT, once again, I can report that it's at 75%, they're all at 70 to 75% completed. But again, the deadline's changed to the 30th of June, so we wouldn't look for them to be finalised until the next committee meeting. So there actually was only 3 that are actually outstanding and we don't have an update for, which, as I say, I can chase that after the meeting, and 5 that are overdue, but we're happy with the reasonings behind that. So again, I'm happy to take any questions on the updated agreed actions if members have any.
Chair?
Sorry, I'd muted again. Councillor Campbell-Saylors.
Sorry, this is my first audit committee meeting, folks. So sorry if I'm asking questions that are a little bit, I'm missing the point. These items you're saying that with the exception of the ones that you've said have got the extended deadline, these have got a target date of completion by the 30th of June. Why aren't they on the agenda for this meeting? I'm sorry, I'm confused.
So this report reports the performance to the end of Q1, which is the 30th of June. Therefore, they weren't due to be completed or updated for this committee because the deadline was extended until after the 30th of June. So therefore, I can give you the update as I had, which, as I said, some of them were 75, some of them were 95, but the actual, because we chase them up quarterly, So it would come to the next committee meeting, if that makes sense, because their deadline wasn't due until the 30th of June, which obviously this report only reported up until the 30th of June.
Thank you. It just seems like a bit of a lag.
Yeah.
If we're not going to see that until the next meeting, which is what, December is the next meeting?
Yeah, I mean, I can certainly, as I said, we will be chasing them up in between the two meetings, obviously, because we chase on a quarterly basis. However, it wouldn't come, as you say, to the next committee. Therefore, I'm happy to send all that information as an update in between those meetings to councillors, just if in case you did want to ask a question or chase one of them up, we could do that prior to the next meeting.
Thank you.
Okay, is that acceptable, Councillor Campbell-Savers? Sounds as if it is. Okay. Right.
So moving on, Chair, the Quality Assurance and Improvement Programme. As you can
Yes,
see.
yes, you're item 6, yeah.
Yeah, item 6. The only thing I was going to mention is obviously training has been held given the circumstances and remote working, and also as councillors probably know already, our Assurance Risk and Audit Manager, Emma Thompson, left the department on the 6th of September. She's now the Hub Manager. So we wish her all the best in a new role, and we'll definitely miss her in audit. But she'll still be around in Allerdale, which is good. So yeah, Emma has now left and we are currently looking at recruiting to her post. So moving on to agenda item 7, which is the risk management. We were involved with the risk profiling for the COVID-19 risks. Chair, I think Councillor Savers has a...
Oh, sorry. Yeah. Councillor Savers, Campbell-Savers, do you have a question?
I did, Chair, thank you. Just on the Quality Assurance and Improvement Programme, a little question. It mentions that the Survey Monkey questionnaire was sent out and there was only one response. How many clients was that sent out to? What does one response look at as a proportion?
So what happens is once we've completed an audit, we have key contacts within that audit and we send it out to all of those. So usually on average, there's around 3 people that it goes to, around 2 or 3 people. So we would, given it's a very small number of people it is sent to, we would really want a full response back. And as you can see, in the last, year, at least the last financial year, we've been getting a low return rate. We have discussed as a department different ways that we can kind of deliver that so that we get a better response rate, because it is important to get that feedback from our clients to see if it's, best practice, if they're happy. So there has been many different discussions. As I just said, the department has gone through a bit of a resource change recently, so it has been put a bit on hold, but we are looking at doing that differently going forward with our clients. And we were planning on doing a bit of meeting with our clients to see how they would best want the questionnaire sent to them, whether that even be if we do it in the closeout meeting, which is when we actually meet with them to discuss the final report, which I think was the preferred option of the department at the time. But we will have to wait and see what happens with the new post of manager, because the decision will, at the end of the day, be with them.
Thank you.
Excuse me.
Lee, are you there? Does someone want to come in by telephone by any chance?
Yeah, no, well, the person on the telephone is our officer, so we don't need to put him on until it is turn to go on to item 6.
Yeah. Could I just mention something to Paula? Paul, I was slightly confused when I first read para 6.1 by the word clients. I take it you mean the people that you've done the audit on?
Yes, it's we have a key client and a key contact, and they are usually the head of service and the manager of the department that we're auditing.
Yes.
Yeah.
Okay, thank you.
No problem. So yeah, if there's no further questions, there was nothing further in the report that I needed to discuss. So unless there's any further questions, we can move on to the final reports.
Right, okay.
Yeah. Okay, so the first one is the revenues and benefits review. I will say that none of the reports on the agenda were actually my report, so I will try my best to answer any questions. However, if there's any technical questions, I will have to go away and speak to the auditor who did the report and provide you an update over email once the meeting is finished. However, as I said, I'm happy to discuss any of the agreed actions as we go. So without going through the report, have members got any questions on the revenues and benefits report?
I'd like to ask one, please.
Right, Councillor Bainbridge.
Right, going through the report, it mentions the actual control environment for visiting officers, and it's got a minimal status there. And when I read through the report, actually looking at it, and these people are lone workers, they hadn't even read the actual lone working policy, and the
Yes.
latest risk assessment had been carried out in 2008. I mean, COVID withstanding, I'm sorry, but 2008 is a long time ago for actual health and safety risks to have been undertaken. And I would have thought when people held their positions as a visiting officer, the first thing that they would do was go through a procedure where they had to read all the policies that actually pertain to that job. So I find it really distressing that Allerdale, as a supposedly good council, has not had control measures in there since then. And it says that all the procedures aren't being followed. So I know maybe all these things don't need to have been done by now, but I would have thought it was a high priority. And I just wondered what you thought about that.
Yes, thank you for that. Yeah, when we did the review, it was very much flagged that there was a few concerns with the visiting officers. Normally, this isn't an area that is audited. However, we did notice that there was some areas that needed addressed when we audited the previous year, hence why we incorporated this into the revs and benefits. And yes, I would agree there was some issues, hence why we have made some recommendations that are high priority, which obviously we don't do unless we feel that there's a health and safety issue. What I would say is that the department were very cooperative and they completely agreed. I think what some of the issues were was that the visiting officers actually sit within the Revs and Bens team and do the majority of the work within the Revs and Benefits teams. However, they are managed separately by the customer services manager. So I think there was a bit of confusion there in regards to why the procedures weren't up to date and being followed. But I would say that the recommendations are all ongoing they are currently, especially the high ones, going forward. As I say, I can provide updates on all of those to where they are at the moment, even though the deadline, as I say, wasn't till the end of June. And as I did say, some of them, the deadline had been extended to September, and the one that was in June at the time of that we did follow up, it was over 50% complete. But yes, all of those things are being dealt with. And obviously at the moment, the visiting officers during the COVID period weren't going out and about, but I know certainly the high priority ones, they were being dealt with straight away, including the lone worker devices, which I know other officers within the council do have those devices. And so we were, you know, looking at quickly getting them for our visiting officers.
I also thought it was strange as well that travel claims weren't being completed properly. And if anybody else was doing it, like councillors, they wouldn't be accepted. So I just wonder how that happened. And I found it hard to believe that both officers had gone 9,500 miles each. That's an awful lot of travelling. There must be better ways of working than actually doing that. So I just wondered if you've had a look at that, because, you know, we're told to be more efficient in what we do. And that's an awful lot of miles for the council to pay for. And I just wonder if anybody's looked at that as well.
It wasn't that they weren't completing their travel logs, i.e. their mileage claims, as you and I would. It is slightly different for the visiting officers, and it was more their diary logs. So there was no correspondence between the diary logs and the claim forms. So
but that means there's no check or balance there when that happens. And so obviously one needs to actually correlate with the other.
Yes, yeah, and that was the issue. We were saying as an assurance measure that should be done. However, I think, as you stated, the main issue was that there was a lot of miles being claimed, which came at a cost to the council, and it was looking at better efficiencies to deal with that, i.e. we do have an Allerdale car, and it was looking at whether that would be more cost effective, because obviously within Allerdale we're looking at doing added values and the best efficiencies, and so that was escalated to the manager, and obviously that is one of the recommendations, and I know they are currently looking at better ways to do that, whether that be Allerdale owned vehicles rather than their own, or looking at visiting differently. So that is ongoing, definitely.
Okay, thank you for that.
Okay. Are there any more questions of this appendix?
Chair, Councillor Campbell-Savers would like to speak.
Right, Councillor Campbell-Savers.
Thank you, Chair. I'm good. I'd just like to home in on one of the sections where we said we had comprehensive assurance, if I might. It's the NNDR section. I just wondered, did we look at the robustness of the application process for non-domestic rates? In particular, are we happy that people applying for holiday lets to become eligible for business rates are actually actively working as holiday let businesses? Do you know if that's something?
Well, we didn't actually test in the remit whether those who had applied for a holiday let were actually holiday lets.
My internet cut out then. I lost you guys just for a second. As soon as I finished asking my question, you couldn't start again, would you, Paula?
Of course I can. Right. We didn't test whether a holiday let that had applied to be a holiday let was an actual holiday let, so therefore the auditors did not then go out and follow that stream of testing to confirm that was a holiday let. However, what we do is look at the assurances in place that the officers put in, and we did test some of them. So for example, if we had an application that had came in to change from a normal council tax to a holiday let for a second home, we look at what the officers did, mainly the visiting officers, to, as you say, confirm that that was a valid holiday let. Some of the assurances they have in place are they can check on Companies House, they can check on the websites to see if there's a website for, if it's, you know, a holiday home that they're letting out. If it's not and it's just their own holiday second home, they then send the visiting officers out to have a look at that. Short of that, we didn't do any testing ourselves around whether that was confirmed. It wouldn't have been in the remit of the audit that we undertake. But if there was issues that officers or managers or heads of services had around that area, they get the chance to discuss that before the audit happens so that we can build that in. And on this particular audit, that wasn't raised as a concern.
Thank you.
Okay. Are there any more questions on this, on Appendix A? Appendix 1, rather.
It doesn't appear to be any more questions, Chair.
Pardon?
There appears to be no further questions
Oh.
unless any councillors state otherwise.
Right, thank you. Okay.
Okay, well, if I move on to the fishing training exercise, we got an external internal audit service to provide the fishing exercise that we did. It states what we went through in the report. So again, I'm happy to just take questions on the report. I can update and say that all recommendations that are within the report were escalated to our Chief Executive Officer, and he then escalated that to the ICT manager, and between them they have now produced an action plan so that all of the recommendations will be completed thoroughly between them all. And again, as I can report, let me just get that up for you. Although none of them are due yet, I can see from the agreed action spreadsheet that a lot of them are actually already very much progressing nicely. But again, because the due dates aren't until August, September, they will be updated at the next meeting, but I will include them if members would like within the update that I will send in between the two committee meetings.
Okay. Do any members feel that we should ask to be informed between the two committee meetings about this?
Yes, we do.
Chair, I think that would be very appropriate.
Yeah.
Okay. So would you take that action on, Paula, please?
I certainly will, and if members feel like it's beneficial for them, I'm happy to do that in between each committee meeting, because obviously, as Councillor Campbell-Savers mentioned, a lot of the updates do come after the report because of how it works with the quarterly updates. So if they so wish, I'm happy to just send a report on the updated agreed actions in between each committee meeting, which again will help them address issues when it comes to the committee.
Right, thank you, Paula.
Chair, Councillor Campbell-Savers wishes to speak.
Councillor Campbell-Savers.
Chair, thank you. I mean, I think the report is what it is, and obviously it doesn't read very great because of the of how successful the simulated phishing attack was. What I would ask though is, did we? I don't think it's covered in here. Did we get a sense from the organisation that did this for us as to whether we were any more inclined to click on those links than other organisations. Is there a, do we know how we did in comparison to others, or is this a fairly standard thing which this organisation is finding with local authorities and other similar size organisations?
What I can say is I don't think we did particularly worse than anybody else. However, we didn't get any, or I certainly didn't get any comparison updates. However, this was done via our audit manager. So I can certainly speak to her and ask if any comparisons were done, or I can speak to the people who actually did the exercise. And I can certainly ask them for an update on whether we are above, below, on par with other authorities that they have done this for. What I will say, obviously, it was a good exercise to do, and obviously, as you can see, there was quite a lot. But as you can see included, the email was very, as we wanted it to be, it was very, very realistic. So unless they had followed every kind of assurance that they could have, i.e. hovered over the email address, hovered over the link, it was quite a difficult one to detect. But from the feedback that I do know, I don't think we were classed as being below average. In fact, if anything, I think it wasn't that bad. It wasn't a big surprise. However, from a council's point of view, we would love to get that to a point where it's at least below what it is now. So we will be continuing with work around that area. And as I said, the chief executive and the IT manager have produced a really good action plan, and they are progressing quite well with that. Also, from an audit point of view, we will be doing more fraud awareness around kind of phishing emails, given that we're now remote working. And I think that will be kind of included in our next ICT audit brief.
Right, thank you, Paula.
I think Campbell Savers has another question, Chair.
Oh,
So,
sorry.
am I right in thinking councillors weren't included in this last email, were they, in this exercise?
I don't think they were. I can certainly check that for you, because I do have a list of all the emails that it went to. So I can certainly check whether that was the case.
Could it potentially, if this is going to be repeated at a later date to see whether there's been improvement, maybe councillors could be included?
Yeah, certainly.
Thank you.
Yes, it just says the number of phishing emails were sent, 294 to the council. Yes, it doesn't say whether councillors were included. Yeah. Okay. Any more questions?
It doesn't appear to be any more questions on that, Chair.
Right, thank you.
And in regards to the cash management, we will discuss that at the end of the committee in part 2 of the agenda.
Yes.
Thank you, Chair.
Thank you. So we now then come to the end of item 5 with that. We will discuss appendix 2 in a closed section of the meeting at the end of the meeting. Are we all content with in terms of accepting item 5? Let me just get to the start of it first. Yes, basically the recommendation should be that the report is accepted subject to any additional information that the committee may require. Well, the additional information, I guess, is what we have asked Paula for during the item. So can I put forward the recommendation that the report is accepted, subject to any subject to any additional information, please? And if anyone that objects to that report, can they indicate that, please?
Yeah, it all seems to be fine, Chair.
Right, okay. So we now then go forward to item 6. Item 6 is the Treasury Management Annual Review, 2019-20, pages 39 to 70. And I understand that will be done by Barry, who is at home on the telephone. Okay. Barry.
Thank you, Chair. Can everybody hear me okay?
Yeah.
Yes.
Yep, good.
Yes.
That's fine. Well, the purpose of this particular item is just to provide members of the Audit Committee with the opportunity to scrutinise the annual report on the Council's Treasury management activity prior to its submission to full Council. The principal aims of this report is to provide members with a summary of the Council's Treasury management activities during the year and other information relevant to answering essentially 3 key questions. The first of which, has the Council complied with the approved strategies in respect of its investing and borrowing activity? Secondly, has it responded appropriately to developments in financial markets to ensure that risks associated with Treasury management activities are managed effectively? And thirdly, has the Council operated within the limits and boundaries established by the prudential and Treasury indicators, which were included in the Council's Treasury management and investment strategies for the year? Members, I'm sure, will be fairly familiar with the contents of the report. These essentially reflect the recommendations set out in SIPF's Treasury Management and Prudential Codes. And for that reason, this year's report follows a very similar format to those of previous years. It essentially covers 4 areas which are relevant to assessing the performance of the Treasury management function and demonstrating the Council's compliance with agreed policies and practices. The first of those 4 areas is commentary on the economic environment and interest rates for both borrowing and investment during the course of the financial year. And these are set out in sections 2, 5 and 8 of the report. The second area is look at the Treasury management and investment strategies adopted by the Council for the year. We'll touch on these in section 6 in relation to borrowing and section 9 in respect of investments. Thirdly, we look at the overall Treasury position at the start and at the end of the financial year, which is set out in section 3, along with some summaries of the Council's borrowing and investing activity during the year. And we use the report to confirm compliance with the approved strategies in respect of borrowing and investing activity. And that is set out in sections 7 and 10. And the fourth area is to look at the performance against the Prudential and Treasury indicators, which are required by the Prudential and Treasury Management Codes and the accompanying sector guidance. This is covered in section 11 with some more details set out in Appendix A. Section 4 of the report also covers details around the Council's underlying borrowing requirement as defined by the capital financing requirement. As far as key messages are concerned, I think there are essentially 3 key questions for members, which I referred to earlier. In that respect, there are probably 5 key messages I think members should take from this report. First, in respect of investment activity, that is during the year, the Council complied with the approved strategy. with the emphasis being on maintaining a low-risk investment strategy designed to ensure the security of principal sums invested in priority to liquidity and the achievement of yield. Secondly, there were no breaches of the counterparty limits, which were agreed as part of the Treasury Management strategies, and these are established to limit credit risk exposures associated with the Council's investing activities. Thirdly, new borrowing during the year totaled £2.5 million, and this was undertaken to meet the funding needs of the Council's capital programme. Fourthly, economic development and performance of financial markets during the year, including the changes made to the interest rate forecast, did not require any changes to be made to the previously agreed Treasury management and investment strategies. And fifth, the Council has complied with the limits established by the Prudential and Treasury indicators included in the Treasury management and investment strategy, which was approved by full Council back in March 2019. If I can very quickly just run through individual sections, and then if you like, we'll take questions after that. Section 2, it looks at the economic background. The aim of this particular section is just to provide some economic context to the Council's investment and borrowing activity during the year, by outlining some of the key economic performance measures and issues that have impacted on financial markets, which have informed our interest rate forecasts over the course of the year. This includes commentary on the quarterly economic growth statistics, as well as inflation and labour market activity. Moving on to section 3, table 1 provides you with a snapshot of the Council's Treasury investments and debt at the end of the current and previous financial years. I will stress that what this covers is investments done for Treasury activities, and in paragraph 3.3 we just outlined those other financial and non-financial investments which are excluded from this particular analysis. Further analysis of the investing and borrowing transactions during the year, which reconcile the opening and closing positions, is set out in sections 7 and 10. Section 4 goes on to look at the borrowing requirement. In other words, the underlying need to borrow for capital purposes as measured by the Council's capital financing requirement, or CFR for short. What the CFR measures essentially is the extent to which our past capital expenditure has not yet been financed from grants and contributions, capital receipts, or revenue contributions. You will see that during 1920, the authority's capital financing requirement actually reduced by 605,000. And paragraph 4.5 of the report provides a commentary on the underlying movements in the CFR during the year. This section also provides an explanation for the difference between the original and updated forecasts, the movement in the CFR, and between the actual and updated estimates. Section 5 deals with interest rates applicable to PDLB borrowing. Table 3, you'll see summarizes for a range of maturities the interest rate expectations included in the Treasury Management Strategy Statement and mid-year report. Graph 1 shows the actual movements in the PDL rates over the course of the year. And this is supplemented by graphs and tables in Appendix B, which show for a selection of maturity periods the high and low points in rates, the average rate spreads, and individual rates at the start and end of the financial year. Members will be aware that PDLB rates are offered at a fixed margin above the government's own cost of borrowing as measured by gilt prices, or gilt yields. And what graph 1 highlights is that during the first half of 2019-20, falls in gilt yields, or the Public Works Loan Board rates, on a falling trend, and this resulted in the halving of the longer term rates to completely unprecedented historic low levels. You will then see a rather abrupt increase in rates at the beginning of October, and that reflects the fact that on the 9th of October 2019, the Treasury implemented, without any prior warning, an increase in the margin over gilt yields of 100 basis points, i.e. 1 full percentage point. That's on top of the current margins of 80 and 100 basis points for the certainty rate and standard rate loans. Members will be aware that there is a typographical error in the text there, and the text should read for standard rate and certainty rate loans respectively. That particular increase is quite marked and can be clearly seen on the graph. After that increase, you'll see that over the second half of 1920, gilt yields and PDL rates were on a generally falling trend. That until the coronavirus crisis hit Western economies. Since then, gilt yields have fallen sharply to unprecedented lows. And that really reflects the fact that a lot of investors have panicked into selling shares in anticipation of recessions in those economies, and have moved cash into safe havens, i.e. into government bonds, which has acted to reduce yields. I've also seen that many of the central banks have started programs of quantitative easing purchases, which again has also acted to put downward pressure on bond yields. As highlighted later in the report, the authority's public works loan board portfolio consists entirely of fixed rate borrowings. This means that as far as the council's existing loans are concerned, we're insulated from the impact of movements in interest rates, whether they're up or down. Where the movement in rates does of course impact is on the rates applied to any new borrowing. That increase in the margin implemented by the Public Works Loan Board in October was a response to falls in borrowing costs since 2018, and also to a substantial increase in PDLB borrowing by local authorities, and certainly to a small group of local authorities who had been particularly heavy borrowers of PDLB loans. In March 2020, the government also published a consultation on the future PDLB lending terms. Under the proposal set out in the consultation document, access to new PDLB loans in a financial year will be removed if an authority was actually planning any debt for yield schemes in its capital plans, including through a local authority-owned company or a joint venture. The consultation also signalled that once a workable solution is designed and implemented to prevent local authorities from using PDL loans to buy commercial assets for yield, that it intends to cut interest rates on all new loans subject to market conditions. Moving on to section 6, this just provides a brief reminder of the approved borrowing strategy that was included in the 2019-20 Treasury Management Strategy Statement, and includes in particular an intended continuation of the existing policy of using internal borrowing to maintain an underborrowed position to the maximum extent permitted by the authority's liquidity requirements and the effective management of its interest rate exposures. And what this means in practice is using cash and short-term investment balances which support the council's reserves, along with favourable cash flows, in lieu of drawing down new external loans. Paragraph 6.3 sets out the key principles underlying management of the authority's interest rate exposures. Key point to note here is that during the course of the year, no changes were required to the previously agreed borrowing strategy, with the downward trend in rates during the year providing a continued justification for deferring new borrowings where possible. Section 7, borrowing activity during 2019-20. So having set out our borrowing requirements, expectations for interest rates and our planned strategy, Section 7 then explains our actual borrowing activity during the year. And that is summarised in Table 3, and you can see from there, new PO borrowing of 2.5 million, scheduled repayments of 320,000. Total borrowing at the end of March 20 is 17.3 million compared to 15.2 at the end of the previous financial year. As explained in paragraph 7.5, the revised capital programme allowed for additional external borrowing of up to 4.89 million to fund the capital programme. However, as during 1920, the reported underspend in the 1920 capital budget, coupled with the timing of capital expenditure and other positive in-year cash flows, has enabled the authority to actually limit the amount of new borrowing needed to be drawn down during the course of the year. So the net increase in borrowing of 2.18 million, coupled with the reduction in the CFR of 605,000, contributed to a reduction in the level of underborrowing over the course of the year of approximately 2.8 million, taking it from 7.59 million down to 4.8 million at the end of 2019-20. In terms of composition of the loans portfolio, then it continues to be made up of a mixture of loans, but all of loans within that portfolio are at fixed rates. We have £8.8 million of maturity loans, and with the remainder made up of annuity loans of 1.5 million and equal instalment of principal loans about 7.7 million. Members note that the comparative figures in brackets should all read 31st of March 2019. Interest rates on our loans portfolio now range from 1.95% up to 9.5%, with the average rate now standing at just under 5% at 4.97%, which is down from the average at the end of last year, which was 5.45%, and really affects the impact of the new loan drawn down at 1.95% during the course of 2019-20. The average life of those loans within the portfolio now sits at around 21 years. The loan portfolio is made up of loans drawn down at various dates between 1968 and 2020. So the rate of 4.97% is essentially a reflection of the historic nature of that portfolio and the exclusive use of fixed rate loans. Just as a comparison, at the end of March 20, the certainty rate of a new fixed rate maturity loan with a term of 21 years, or the same as our average life, is around 2.63%. As explained in paragraphs 7.10 and 7.11, so whilst the interest rate on the authority's loans portfolio does remain above rates which apply to new borrowing, differential between new rates and premature redemption rates continues to make reschedule unviable at this time. In fact, during the course of the year, the increase implemented by PBLB has actually increased that differential, which again limits any opportunities for rescheduling at the present time. Just to illustrate that point, paragraph 7.12 indicates what the redemption value of the current debt would be at the end of March 20, at just over 35.8 million, and with the majority of that difference reflecting the premium of 18.3 million that would be payable should we have redeemed it prematurely at the end of March 2020. Moving on to section 8, look at investment rates. Graph 2, paragraph 8.5, shows a trend in investment rates during the year alongside the movement in the bank rate. What we can see from that is that deposit rates continue to start into the start of 1920 at their previously depressed levels and have remained low throughout the course of the year. Rates for 3 months or longer were generally on a declining trend over the course of the year, while you see that shorter term rates remained broadly stable. Obviously, the main change in shorter term rates came in March when the two emergency cuts in the base rate from 0.75 to 0.25 on the 11th of March, and then again from 0.25 down to 0.1% on the 19th of March, saw sharp falls in short-term rates. Finally, what you can see from the graph is that following the outbreak of the COVID-19 pandemic in the final quarter of 1920, longer-term rates initially fell before moving sharply upwards as a result of a spell of shortage of liquidity in financial markets towards the end of March. Moving on to section 9, which summarises the investment strategy for 1920. As I said before, with the focus there being on a continuation of our existing policy, that is a cautious, low-risk investment policy, which is centred around the use of high-quality investment counterparties, with investments made for shorter time periods, which invariably result in low returns compared to borrowing rates. During the year, there were no changes made or required to that previously agreed strategy or to the primary objectives of that policy, which was namely to the security of the principal sums invested. Investment outturn is covered in section 10. And the essential aim of this particular section is just to demonstrate the compliance with the approved strategy. It shows that during the year we maintained sufficient levels of liquidity through the use of money market and call accounts, both of which provide immediate access to funds. And all the counterparties used during 1920 were with financial institutions with a minimum long-term rating of A- or above. In other words, high-quality investment-grade investments. Paragraph 10.9, meanwhile, confirms that the maximum amount placed with any one institution or group of institutions within the same banking group during the year did not exceed the approved limit of £4 million. During the year, our average short-term investment balances were around £13.6 million, slightly lower than the previous year of £15.6 million. The difference, in large part, reflecting the levels of underborrowing that we carried during the course of the year. These funds earned an average of around 0.65%, which was up marginally from the previous year, but clearly low by historic standards. It did, however, compare favourably with the benchmark return, which is the 7-day Libid rate, which over the course of the year came in at 0.53%. Section 11, the final section of the report, then looks at the prudential and treasury indicators, which are required by SITFA's prudential and treasury management codes and the accompanying sector guidance. And further details relating to individual indicators are included in Appendix A. In short, the key message here is that during the year, the accounts complied with the limits established by those indicators, which were included in the Treasury Management investment strategies. There were no breaches of the Council's authorised borrowing limit or its operational boundary. Those indicators which displayed the most significant variances compared to the previously agreed amounts related to capital expenditure, which is set out in Table A, the capital financing requirement in Table B, and the gross debt in CFR, which is set out in Table C or in Appendix 1. In each case, the variance between the revised estimate and the actuals for 1920 are fully explained by the variances and budget carry-forwards, which were reported to members in the 1920 capital outturn report, and the impact of those particular changes in variances on the underlying need to borrow. Meanwhile, the indicators which are required by the Treasury Management Code are set out in sections 8 and 9. And again, these highlight no significant concerns in relation to Treasury Management risks. I hope members found that run through the report helpful. I'm happy to take any questions that you may have.
Right, thank you, Barry. Now, do members have any questions on this report, please?
It doesn't appear to, Chair, unless the members indicate otherwise.
Right, okay. In which case, am I able to proceed? The requirement of us is that the contents of the Treasury Management Annual Review simply be noted by the Audit Committee. If anyone feels otherwise, can they please indicate that?
Again, Chair, there seems to be no indication from any members.
Right. So therefore, I put forward that recommendation that the report be noted. Okay, thank you. Now, the next item is item 7, which is the Grant Thornton Progress Report. Now, this in fact wasn't included on the original agenda, but Lee has circulated copies of this electronically. Is everybody, has everyone had time to look at item 7? Is that okay, Lee? Okay, so
Yes,
could I ask Grant Thornton, presumably Richard Anderson, to proceed with this report then, please?
Yeah, Chair, if I may, it's Gareth here. I'll introduce it, and then Richard will provide some further detail on the report itself. So first of all, thank you, Councillor Tyson, for allowing us to present this report. It's a standard progress report, giving an update on the progress of the main audit on the accounts and the value for money, and then some sector updates as well. The committee will be aware of the new deadlines as a direct result of COVID-19. Preparation of the accounts moved to the end of August. We received the accounts at the end of August, or actually before the end of August, actually, and the progress on the audit of the accounts is good. We're still to complete our work on the value for money element, which is, there's 3 significant risk areas there that Richard will touch on, which is quite significant and will be challenging. In overall terms, completing the audit 100% remotely is challenging. We're finding this across the board, but we're working very well with the authority, and we are still aiming to sign off by the end of November, with the audit committee scheduled for the 24th of November. The sector update does touch on COVID-19 related reports. I did just want to very briefly highlight to the committee that since we issued this report, there has been the release of the Redmond review. So Sir Tony Redmond has done a detailed review of the sector, and his report is the overall theme of it was to create greater accountability and improve transparency for financial reporting, and it also found that reform is urgently required. and has put together key recommendations and implementation plan for the NAO and MHCLG as well, to enact the recommendations, some of which could be done in advance of legislative reform as well. So the reforms will impact on audit providers, the council's arrangements and the overall regime. I will just give a very high level, some headline messages from it, and then very happy to pick this up as the review is further digested and recommendations implemented. We will work with the officers maybe to provide the audit committee members as those charged of governance more detail on its impact going forward. Things in terms of auditor provider review, that element of reforms, that, you know, there's recognition that audit is currently underpriced by circa 25%. They're talking about moving the reporting deadline back from July to the end of September. And, you know, there will also be sanctions for poor work by auditors, particularly in and around auditors not reporting on a timely basis where councils are heading for financial meltdown. So in terms of reforms for councils arrangements, I think there's a requirement for the audit profile to be raised, and the suggestion is that that's done via addressing full council each year to avoid any dilution or misunderstandings of key messages that would normally go through audit committee. So, you know, there's also a requirement to formally meet with the statutory officers, the three statutory officers being the head of pet service, the monitoring officer, and the section 151 officer as well during the year. And audit committees to include independent members as well. And then the reforms to the regime itself, regulation to be brought under one formal sort of system leadership arrangements. And the proposal is for Office of Local Audit and Regulation. And there is a key stakeholder committee being set up with all the stakeholders, including MHCLG, FRC, ICAW, SIPFA, LGA, etc., to meet as well on a quarterly basis. So these are some really big changes that are afoot. The other suggestion is to introduce summary accounts on and around financial reporting. I think it's important to say that this has not been legislated yet, but it is a fundamental review of financial reporting and the local audit sector, and you know that there is a recognition that significant change is needed. So I think what we'll do, as I say, is we will keep the audit committee briefed on the developments of the Redmond review, and as I say, we'll work with officers going forward and present to the committee further details on what of all this means. Obviously, it won't impact on this current audit year. It's certainly one for the future, but I thought, given that the review's just been announced recently, that it was timely to raise it with you as a committee. And we do have a slide deck as well, which I'm happy to share via Lee and the officers to give you a little bit more detail on that actual Redmond review itself. So at this point, Chair, I'll hand it back to Richard. Richard will take you through a bit more detail on the actual progress report and sector update. Richard.
Thank you.
Thanks, Gareth. So yeah, I'll pick up on the details of the report. I'll start on report page 6. Pack page 6, which is our report page 4, which is headed up progress at the 21st of September. As Gareth mentioned, progress is good on the audit. We're kind of taking full advantage of the technology at our disposal to deliver the audit remotely. what the progress report tries to do is just highlight the work that we've done against each of the significant risk areas which were identified in our audit plan. So I'll briefly talk through each. The first significant risk area was a financial statement level risk in relation to the kind of various impacts of COVID-19. I suppose in terms of this risk area, one of the things we've had to do is review the materiality level set for the audit in view of the impacts of COVID, and that hasn't led to any changes to those previously reported to the committee. Behind the scenes, we've been in regular contact with other audit providers and regulators and the government department around some of the issues which are impacting the sector, particularly around the valuation of properties. So kind of that liaison in the background has ensured kind of a consistent approach across the sector. One area is, as I say, around properties, and there's going to be a material uncertainty paragraph within our opinion, just highlighting that there is greater uncertainty this year around the valuation of buildings because of the impact of COVID. And the other area where we've progressed work in this risk is just around some of the disclosures within the financial statements around the impact of the pandemic, and we've got obviously nothing to report to you in relation to that at this stage. Moving on through the report, the next two significant risk areas on the audit are the presumed risk of fraud in revenue and expenditure recognition, and as we reported in the audit plan, we were able to rebut this presumed risk for this particular audit because of the nature of the revenue and expenditure streams at the council. With regards to the presumed risk of management override of control, again, this is a presumed risk on all audits, and we have been progressing our work in this area. Obviously, a key area of focus here is around controls for the posting of journals. And we've been able to document, understand the kind of controls around the journals process. And we're also at a stage where we've been able to select a sample of journals for testing, and that testing is in progress. And again, there's nothing to bring to your attention in respect of this risk. Moving through the report, the next significant risk is around the valuation of land and buildings. Again, I've referred to the great uncertainty in this area because of the impact of COVID-19. Today, again, we've been able to understand the controls the council has in this area, and we've also done some initial work around the work that's been carried out by the council's property valuer. And again, the more detailed testing is just starting, and obviously we'll report our findings in this area in our audit findings report in November. The final significant risk area is another significant estimate, the valuation of the pension fund net liability. Progress is similar to property, plant and equipment in that we've kind of reviewed keep the controls in place in this area, and also the competence qualifications of the council's expert, which is the actuary. And again, we've got nothing to report at this stage, but the testing is very much in progress. Obviously, there's a number of other areas that our audit procedures will cover, and on report page 8, we just list out the other audit areas where work is in progress, which is effectively all the other material balances and disclosures within the accounts. As I said, the audit is going well, and we've got no issues arising at this stage. So yeah, we're pleased with progress, but there are obviously a number of areas still ongoing. As Gareth mentioned at the start, we do have 3 significant risks in our VFM work, and I know we discussed these areas at the previous meeting when the plan was presented. The significant risks are in relation to financial sustainability and looking at the council's medium-term financial plan. And then one significant risk in relation to waste and recycling contract and procurement arrangements and decisions made in that area, and also around the Workington Community Stadium project and arrangements to support key decisions made around that project. This is going to be obviously a key area of focus over the coming weeks of our audit, and we'll be looking to schedule meetings with key officers to really understand obviously the latest position, but also arrangements that were in place during the year in these key areas. Obviously, when we present our audit findings report, we will kind of have quite detailed disclosures around our work and our key findings. But just to emphasise that this is obviously a key part of our work on the 2019-20 audit around these key decisions. Page 9 of our report just highlights the timetable for our deliverables. Obviously, the audit plan and fee letter have been presented, and just to highlight that we're intending to present our audit findings report and is our intention to bring our auditors' report, our opinion on the accounts and DFM to the November committee. The back half of our report, so obviously talk through the progress, is our sector update, and this particular report just obviously, as you'd expect, just focuses on some of the firm's initial work around the impact of COVID-19 on the local government sector. I think there's a range of different slides here, just highlighting some of the angles that we as a firm have looked at the impact of the pandemic on the sector. I think our work's acknowledging that the pandemic comes at a time when the local government sector has faced some significant challenges around austerity and funding over the previous years. And I guess we're highlighting some significant COVID-related impacts on the sector in terms of increased expenditure in managing the emergency response, some potential lost income due to closed services during lockdown, and also the fact that the pandemic has made the delivery of some savings plans more challenging. We also highlight that potentially the estimated impact on the sector could be as much as 6 billion, but obviously that's an estimate at this stage, and it's difficult to know fully the impact at this point in time. We also try and bring out some of the kind of key risks as we see it impacting kind of key challenges facing the sector in terms of how to stand up services which have been closed down during lockdown, how service delivery models are changed and as a result of COVID-19, the kind of wider economic impact of COVID-19 on local areas, but also the potential that the pandemic creates opportunities. Kind of we've all been working slightly differently over the past few months, and whether that's creates opportunities for us to do things better or more efficiently in the future. The rest of our progress report just as I say highlights some potential learning from previous recessions, but also includes a COVID-19 vulnerability index, which is some initial work the firm's done using a variety of metrics to highlight which areas might experience some of the worst impacts. And then there's some potential scenarios that may impact the local government sector in the coming 12 to 24 months, and then some examples of some strategies and some responses we've seen across the sector. But as I say, this is very much like our initial work in the area, and there's a lot more to follow. So that's a flavour of the sector update, but I'm more than happy to take questions either on the progress element or that sector update element.
Right, thank you, Richard. Do councillors have any questions either on part 1 of the report, the progress report to 21st of September, or at 21st of September, or the part 2, which is the sector update? Taking the progress report to 21st of September first.
Councillor Campbell Savers would like to ask a question, Chair.
So
Right.
I know
Councillor
you
Campbell
went over it-
Savers.
I know you went over it quite quickly, Richard. I was wondering if you could just explain a little bit more about that, the management override and controls area of your work. Give us a little bit. Could you give us a little bit more detail?
Yeah, so this is a presumed significant risk on all audits, that there's a risk that management could kind of override controls in place by, and effectively change the financial position by either, there's a variety of ways this could occur. It could be through the posting of journals, or it could be through estimates included in the accounts and potential manipulation of estimates. So as auditors, we are required to address this risk on every audit. So every audit plan that you looked at, whether it's in the local government sector or obviously in the public sector, would include this risk. So in terms of the work we do in response to the risk, part of it is looking at key estimates and judgments made in the accounts, and that is why you'll see that we have significant risks in relation to the two most material estimates in the accounts relating to the valuation of land and buildings and also the valuation of the pension liabilities. So we do quite granular work around key assumptions and the methodologies adopted to make these estimates to ensure there's no bias in the way these estimates have been made. We also do detailed testing around other estimates such as income and expenditure accruals made close to year end. So that's one element of our response to this risk. The second is by testing journal entries. There's obviously thousands of transactions in a year posted to the general ledger. So what we do is we use some kind of IT data analytics type software to try and identify the what we'd regard as the most high risk journals, the ones which with the characteristics which might be indicative of management override of control. So we use some quite sophisticated software to try and identify these kind of highest risk transactions, and then once identified, we kind of subject those to detailed testing, kind of corroborating kind of the rationale for posting the journal to supporting evidence, and really understanding why the journal is being posted to kind of ensure that it is regular and in the ordinary course of the council's business. We also do some kind of wider work around the controls for posting journal entries, around access to the financial to the general ledger, and also around review of journals posted. So that's a kind of a flavour of what we do. I hope that helps.
And in terms of progress right now, I think you've given me a flavour of kind of what it's about. And where are you at with that particular exercise?
So we've understood the control environment, and we have identified the journals that we're going to be testing. And that sample has been shared with the finance team, and the finance team are in the process of providing the kind of evidence to corroborate the transactions that we've selected for testing. And in terms of the kind of key estimates, we've selected a sample and done some testing around the debtors and creditors year-end accruals, and our work around the key estimates of property, plant, equipment and pensions is in progress, kind of reviewing the work that's been done by both the property and the pensions expert. So we've got no issues arising at this stage, and the work is very much in progress.
Thanks very much. Chair, could I ask another question?
Yes, certainly. Are there any other people waiting to ask questions? No, go ahead, Councillor Savers. Yeah.
Thank you. I like your little vulnerability index thing. I like graphics like that. Very lovely. Am I right? That doesn't include district councils in there, does it?
I think it's at a place level, so I don't think it's not necessarily reporting at a kind of council. It's not just reflecting the local government framework. It's at a place level, so it's understanding Cumbria as a whole without kind of making it distinct between the county council and the district council. I think there is separate work that's been done specifically on the impact on county councils and on district councils, but I don't think that's not captured within this index. I think this index is more kind of a higher level place level on the impact on, for example, Cumbria, rather than making that distinction.
Just looking at the key for that for the right-hand image, it shows unitary and Met, London boroughs and county. So I thought it very much was basing it on local government units.
I mean, I can.
I'd just be curious if there's some similar thing which shows us what's happening with district councils.
Yeah, I think for this sorry, if I can come in, Richard, for this analysis, it has been done at that county Met unitary level. But as Richard said, the place analytics tools that we've developed, it may not be on the vulnerability index itself, but there is like over 4,500 different data sets that we analyze, and it goes right down to ward level. So, and it is done at district level as well. So I'm not sure if we've got a vulnerability index at district level. We've got it at county level here, but there are quite a suite of data sets that can be analysed down at district, down to ward level. I appreciate you're a new councillor to the committee, Councillor Campbell Savers, but we in previous progress reports we have given the committee flavour of the wider suite of place analytics that are available. So again, we can make those available to you.
Could I just ask, one follow-up question then? It shows Cumbria as quite low vulnerability next to the lowest vulnerability level, with that pale blue colour in the left-hand image. Would that be right for the districts in the area, do you feel, or is that representative of where we are?
Yeah, it's very complex, isn't it? And there's a lot of data sets taken into account here, as the bubble indicates there. And in some elements, it's having a bigger impact than others if you break it down into those subgroups. So in terms of economy, because the tourism service-based economy, there is a bigger impact. So the colour might go slightly darker on economy, as opposed to place type indicators or health indicators. So it really does, when you get into it, it does vary on each of them. But I wouldn't have thought there'd be a massive difference on the overall county position to Allerdale's position. But we can take that back to the team, can't we, Richard, and see if there is something that can be broken down more granular for you.
Yeah,
thank you.
There's a kind of more detailed report which has this kind of headline figures, but they are broken down into a more local level in an appendix, which I'm happy to share via link, so you can have a look at that in a bit more detail.
Thank you.
Right, thank you. So, do we have any more questions on either section of the report?
It doesn't appear so, Chair.
Right, thank you. So, can I just check, Lee, at this point I close the public part of the meeting?
Yeah, if you just if you're happy to close down that item, yes, Chair, you can move on to the resumption of item 5.
Okay. So can I just ask the councillors are quite happy with the Grant Thornton items?
Yes, Chair, it appears that way.
Yeah, it looks like a negative response. Okay. So we now have, or the committee has to discuss the item 5 appendix 2, the audit report for cash management of car park income, for which we have to exclude the public under para 3 of part 1 of schedule 12A of the Local Government Act 1972. So could you tell me when this has been done, please, Lee?
Yes, Chair. For the members of the public, we are going to stop the live stream now as we're going into a restricted item.